Hello everyone and welcome back to another episode of the Smart Money Show. My name is Noman and Ali, and as usual I'm joined by Ali Suleiman. How's things going, bro?
I'm amazing. I'm feeling quite hot actually because we're outside, which is new to our viewers and listeners. If you're listening, head over to the YouTube so you can actually see us. We're actually filming outside for the first time on a tennis court, which is actually crazy. It's my first time on a tennis court, which we're going to get into. But how are you anyway?
I'm all good. I mean, it's just today, what a venue. I mean, what other podcast does this? Like, we're one of a kind, aren't we?
Yeah, no, exactly. And I think that's evident with our guests today. So a brief intro, as much as we can, for our three guests that we're joined for our 10th episode of the Smart Money Show. So first up, we have Alex. He's the head of macro trading strategy at AlphaPicks, where he not only manages the firm's portfolio, but also leads on written market commentary. Before joining the team, Alex spent 7 years at Citibank, working on the FX sales and trading desk, gaining deep experience in markets. Next is Jonathan, a private investor with a diverse portfolio of stakes across sectors, from AlphaPicks to Kensington Tennis Club. Having made his first fortune through cryptocurrency, he now splits his time between corporate ventures and the tennis court, of course, a little bit as well. And finally, we have Jesse, the founder of AlphaPicks and the current head of research. Before launching the business in 2021, Jesse spent 4 years as a full-time equities trader, building the foundation of what would become one of the UK's most followed trading communities. With experience spanning traditional finance, crypto, entrepreneurship, and content creation, this episode is packed with insights on markets, trading, and just building something from the ground up, which me and Noman have very little experience with. So a special thank you to the AlphaPicks team for hosting us for our very first outdoor episode, as we said, filmed on a tennis court in the heart of Kensington. I think we feel a little bit out of place. I drove here in a Vauxhall Corsa, past too many nice cars. But it's a fitting backdrop for a conversation that blends markets, mindset, and momentum just as a whole. So what are we talking about today? So in this special roundtable episode, we explore the founding stories behind AlphaPicks, dig into each guest's individual career journey before joining the AlphaPicks team, and unpack their trading philosophies across different markets. We'll also dive into the content strategy that helped grow their brand, discuss the current macro outlook that is in these very uncertain times, and finish with a round of advice and reflections for students aspiring to break into finance, trading, or relevant entrepreneurial ventures. So very, very long intro, but very, very deserved. So very excited to welcome all three of you guys on the podcast. How are we doing?
Very well, thanks, Ali. Yeah, thanks for having us.
Yeah, really appreciate
Thanks for having us, bro.
Yeah,
thank you.
I mean, thanks again for this amazing venue. Like, it's genuinely amazing.
This is our office, you know, where the magic happens.
Amazing.
I
Well,
mean-
do you want to kick things off?
Yeah, 100%. So, as Ali said, we're going to be talking about your personal background, interest in finance. So, just like a question to the table, what sparked your interest in finance and trading? And then, was there maybe a defining moment? Alex, I'll start with you then, maybe.
Yeah, it's a great question. I think for me, it wasn't so much what sparked my interest, but where my skills lay, or maybe not where my skills lay, but where my skills didn't lay. So at school, I was terrible on the sports field. I was terrible in the orchestra. They didn't actually let me get to the orchestra. But my only things that I was actually good at was maths. So logically, as you went through sort of secondary school and into A-levels, where does maths and sort of business and economics tie in? It's financial markets. So for me, that was where my interest sparked in terms of the things I weren't good at. I had to discard them. And what I was good at naturally meant, okay, well, finance is kind of the area to go down. So for me, that was sort of how I not fell into finance, but because it was what I was good at with the numbers, it naturally sort of started to appeal from my sort of late teens.
And then, Jesse, what about you?
Yeah, it's similar that for me, maths was a strong point. I guess if you're going to go into finance, it's a useful skill to have. Yeah. I'd always been interested in markets and followed, as a teenager, would just read kind of magazines on it each week, but never did too much specifically in it. Started my career in finance, and then a few years ago transitioned into setting up AlphaPicks and focusing more on the market directly.
Which we'll get into, of course, but finally, Jonathan.
So I mean, I love sports. That was what I did at school. I love tennis in particular, anything that involved running around. But I think the main thing I always liked is I enjoy the hustle. I enjoy taking something from nothing and trying to make it into something. So that's why I got into tennis. I love tennis coaching. That's one thing that I started as a player and then got into coaching itself. And then I just, in the tennis environment, you're around a lot of people in finance. So that's basically how I started getting into cryptocurrency about 7 years ago. And yeah, I really enjoy taking, whether it's a business or just trying to find a niche, something that doesn't exist, and basically trying to solve a problem. I mean, that's what an entrepreneur does, doesn't it? It tries to solve a common problem that a lot of people have and then try to monetize it, basically.
Yeah. Well, we always like to start off with that question. I think it provides a good foundation to the whole episode, and we can tell there's diverse skill sets, but also ones that complement each other very much so as well. So we're going to go into some individual questions a little bit as well. So Jesse, I'm going to start with yourself. So you started AlphaPicks back in 2021. Was there a particular gap you noticed that was like, right, we should really start something like this?
No, so I didn't start it based off any kind of gap in the market that I saw. It was started by early in the pandemic. I was starting in the markets, putting my money into some investments, some trading, and I found that writing my thoughts and my thesis on something was a good way to approach the market, and it kind of just developed from there. Started writing on a website, set up on Twitter, got a bit of some traction, and built it out from that point.
Amazing.
And just chipping in on that as well, I think one of the things that Jess is probably a bit too humble to mention, but it's like there are some people who write their thoughts down on what they're buying or trading, but if they can't put it across in a really digestible, easy to understand way, no one's going to take any interest in it. So I think one of the things that made AlphaPicks really unique in the early days was that it was Jesse sort of putting down his thoughts on what he was doing, what he was seeing in the market, but it was in a really interesting way and easy to understand. And that's how it started to build traction, because if it was rather dull or if his ideas were bad, then AlphaPicks never would have got off the ground.
So
So
of course.
that's the early sort of kudos I'd give to
Yeah, and I
on
think
that.
people also had more disposable money during COVID. They were sat at home, not as much things to do. So sort of the way Jesse would put together the articles, I think back in the early days, really registered, especially with a young audience instead of OAPs with a Zoom account.
Yeah.
But then, Jonathan, then sticking with you then. So your initial start in crypto, you mentioned it during your the earlier question, but it's a unique space. How did you even get into it then?
I mean, honestly, it was about maybe 15 or so. I moved to London, so I'm from Bermuda. When I moved to London, I started doing tennis coaching, a lot of private coaching, especially in this area in Kensington. And it was during a time when you had a lot of these sort of challenger banks were starting to pop up. So ones like Revolut, Monzo, all these other challenger banks. And people would be like, oh, I can pay you, but I can't pay you with this account. I can pay you with this account. And you know what I mean? So that's how they would send payment. And it was a couple of guys, very smart sort of entrepreneurial guys, which were like, actually, do you accept Ethereum? Or actually, can I pay you in Bitcoin? And I was like, okay, whatever it is, just get on with it, And then I started to realize, well, what is this? So I kept it, and then I looked into it more, especially with companies like Revolut. They've got quite a good interface for that sort of thing, especially when you don't know too much about it. And really, that's what started it.
Yeah, it is definitely a unique intro into it. But as I said, this is just an introduction section. So final question to yourself, Alex. So working on Citi's FX desk, was that always the plan, the goal, sort of the start of the career that you wanted? And what was the plans before AlphaPicks came to your life?
Yeah, it's another great question. So I think for me, coming out of school, I think that, to be on a trading desk at one of the big banks in Canary Wharf was the place you wanted to be, for sure. But it's funny because as you progress and go through your career, often your perception of where you want to be at a certain point in time then changes when you get to that point in your life. And so for me, I thoroughly enjoyed my 7 years at the bank, but it got to a point towards the end of it where, as we'll probably dig into later, in terms of your autonomy to write your own thoughts or, some of the restrictions you have, actually you then turn and say, well, I'd actually like to be slightly more freer. And you look for opportunities or avenues to change that view. So even though, yes, if you asked 18-year-old me, would you like to be sitting with these huge screens, drinking too much coffee, I'd be like, yeah, sounds amazing. But then, after a period of time in your life, your goals slightly change and you look for different opportunities.
Yeah. That's super transparent, I think, for a lot. I mean, even myself, dream is work at a big bank, work your way up. You don't know what's going to change in a in a few years as well.
Yeah,
Hopefully
and-
something like AlphaPicks comes into my life. Hopefully.
Yeah, I mean, and I get that advice so much because, like, for me in the career path I'm aiming for, a lot of people have told me that I shouldn't like pigeonhole myself towards like this one specific desk at a specific bank because, like, okay, maybe for the first 2 years I might really enjoy it, but okay, 20 years or longer than that, like my whole career, it could be very different. But moving on to the next section then, more about your careers before like AlphaPicks. So this is to the table then. So have you guys ever like considered maybe giving up because like this industry is so like varied? So, well, what's your experiences like within that then?
Yeah, I don't think we ever had any concepts of giving up. I think the main thing, I think one of our big strengths is our, I say, mental fortitude. So I'd say John sort of sits at the top in this one, where it's like his enthusiasm and his sort of can-do attitude, be it in business, on the tennis court, in whatever aspect of his life is, he's someone who doesn't see the problems, he sees the opportunities. And I think that, particularly in a business and a startup sense, be it AlphaPicks, be it tennis club, be it any of the endeavors we've had, have always meant that from day one, we've always thought, you know, what if this all works out? And we haven't had that attitude and that mindset of, oh, do you know what, you know, if you know, we've only got a year's worth of cash flow, and if we can't make it, we can't make it. And so certainly from my perspective, and interested to hear yours as well, is that I don't think we ever had that mindset of what if the venture doesn't turn out well, because we back ourselves to such a point that we will be able to make things happen. Sure, maybe we don't understand exactly how it's all going to work out, but we're confident that at the end of the day, everything will work out.
Yeah, I mean, it's interesting how like there's I mean, for me, I try to read the Bible daily. That's one thing that's helped me. And there's a really good principle, and it's whatever you do, basically be the best at what you do. And if you are, it's before kings you'll be placed. Right. So the thing is whatever it is that we've done in the past, we've always thought, let's just try to be the very best we can be at it. Yeah. And if you're the best hair cutter, if you're the best hairdresser, well, one of the Saudi kings are going to get you to cut their hair. Do you see what I mean? If you want to do tennis, try to be the best you can be at tennis. If you want to do finance, or you want to do trading, or whatever it is, try to be the best you can be. And then we've had loads of setbacks. You get setbacks 24/7. But it's just trying to plug the gap and try to work out, well, you know, every problem raises an opportunity. So it's trying to think, well, what opportunity has just been created? I think the main thing is we've always just try to, we joke around a lot and we try to have fun. Yeah. And if it's not fun, then we just don't do it. And I think that's really been the motto of what's really worked. And we all inspire each other, you know, like Jesse inspires me, you know,
we get that vibe,
with his superb articles. And Alex is just like, you know, he runs from place to place. So we're always, it could be 3 a.m. and we're just thought of this idea, or we were just on the bench just now, weren't we? I said, Tom, write down this idea, you know? So we're always thinking of ideas and trying to think outside the box. And because we have so many ideas on the go, when one idea isn't working, then we just flip it into something else.
And the other thing you mentioned, briefly talking about Tom, who's sitting off screen now, but we have a great support network. And I'd say that's definitely an early sort of takeaway for anyone listening to this, is that whenever you go, there's an expression that says, if you want to go fast, go alone. If you want to go far, go together. And I think it's very true in business that, you know, if you start off as a one-man band, or you just try and do everything yourself, you're going to burn out, you're going to blow up. You can't do everything yourself. But if you have a good team, for example, you know, going into business with, you know, a team is one help, but also within the team, having a support network of people you can trust, people that care about you, people that can call you out if you're doing something wrong, you know, that's just as much as praising you for doing something right.
You don't want yes men.
You don't want yes men, You want people that are going to be honest with you, but that are going to support you through any endeavors. And so that's the other thing, is that we all have great friends, great family that can support us through and sort of help us to go in whatever avenue we want.
Yeah, I think just linking on what John was saying about taking opportunities as they come, I think it's good to have like a vision of where you want to take something, but not being so set in that one lane that if something comes along, or if something's not working, you're not willing to adapt. Like, you do need to be open to changing lanes slightly, but still heading in that same direction that you want.
So what were some of the setbacks you guys faced when building AlphaPicks? I think we're going to ask that later on, but I wanted to, because you mentioned it, Jonathan, so I thought, what were some of them? I mean, Jesse especially, because you were the first writer, you were the founder. So what were some of the setbacks? Was it like, well, I've got to change my style of writing a little bit, or I've got to talk about more relevant stuff? What sort of stuff did you face?
So the style of writing, what you're writing about, is definitely like a ongoing progress, and you learn on the way. There's always a way to improve. Setbacks is definitely been, because it is very like traffic driven. Some of the setbacks have been continuing the growth and figuring out how to use social media to tap into new audiences, get new listeners, engage the listeners or readers in this case. That's definitely been a setback, but not one that was too much of a problem to overcome.
And I think, I wouldn't necessarily tag it as a setback, but I think one of the problems or dangers you have in that startup phase is that you become sort of hypersensitive to statistics, the hits, how many subscribers are you getting, where are they coming from, what's the retention rate, how long they last on the page, and you become so sensitive to like, oh, we only gained X amount of subscribers last week, which was 20% down on the week before, or you've been there, right? And it's like, I wouldn't say it's a setback, but it's a problem to growth, because you become consumed by this this presence online of that your success is based on likes, or your success is based on hits. And so that's something we've contended with over the years, that, you might put out a fantastic piece with some brilliant trades in, but if only X amount of people like it, you feel like the business isn't going in the right direction. And so I think trying to differentiate that and sort of cut out that emotion side is definitely something we've tried to do more.
It's a little bit like, as well, the cool thing with AlphaPicks is we're relatively young. I mean, I'm the oldest, so these guys are younger. But there's, we can move. It's like a wheel within a wheel. So the business can move wherever, if we see that people aren't liking a certain type of article or a certain theme, it's very easy. We just have an open chat about it. We're very easygoing in terms of we don't get offended amongst ourselves. And it's very easy just to change lanes. And then that's where we get the success without having to go a million miles down a rabbit hole without any success.
I think when we started realizing the value we could provide, but then there was definitely a section last year where we were like, this video did better, let's just do more videos like this. But then we realized our target audience wasn't gaining much value from it. Just because the number said something, the watch time was lower, so it just meant they weren't learning enough. So then we found that if we chase value, we chase helping students, we chase the actual reason why we started, then the quality of views goes up. The people that actually learn something from it goes up. Would you agree?
Yeah, no, 100%. And then even from like now what we're planning and setting up recently is more like, okay, we've got this podcast, it's helping like people learn about finance, but then, okay, what other ways can we get that message across? So yeah, just like, I guess if you start on one output, like way to output your voice, you need to realize that there's other things you can do as well.
I just thought of one question I can't believe we didn't ask, like, how did we all meet? Do you want to ask that? We should have asked that at the start of it. I just should have written that down.
Just a bit of an open question then. So how did you guys all meet then? Because you've got like different careers, early careers, would you say? So
So I met John a while ago. It was actually I've got an older brother who's the same age as John, so I met him through there. Always would chat to John. He was a bit of a role model. He was here in London doing his own thing. That kind of was a bit of an inspiration for me. And then I'll leave you two to...
To our audio listeners, they just embraced.
I'll leave you two to talk about how you guys met, but I met Alex through John in late 2020.
Alex was after one of my sisters.
That is not true. I'd like to set the record straight on that. If you're watching this, Rachel. So I moved to London in 2013 after I'd finished school, and obviously John moved to London. When did you move to London?
2012.
2012, yeah. So we were both sort of fairly new in London, and we met through a mutual friend of ours in 2015, I want to say. And when you just sort of click with someone, We both, I don't know what we'd say, our low IQs both matched each other. Our lack of charisma and charm embraced, and really went from there. Yeah, and we've been great friends outside of business and in business, and over the 10 years we've done all sorts together. I was best man at John's wedding, which was a lovely privilege. We've part of the businesses stemmed from just having those ideas and shooting them from each other and saying, exactly John said, if there's a problem to be solved, let's try and solve for it. And then specifically with AlphaPicks, so when John introduced me to Jesse, and Jesse obviously later sort of spoke about this idea he was doing. And then he grew it and it started to get more and more traction. And then, it got to a point where I was looking for a bit of a career change out of the bank, and thought, you know what, let's join forces and really let's rock and roll. Yeah.
Amazing. Well, I mean, we met, believe it or not, so we're only 19, we turned 20 in August, and we're actually a day apart from each other, but we met in year 8 in secondary school, so we've been on and off since then. Really, we've had our moments. To be fair, in like year 10, year 11, we just didn't talk, but then we did the same sort of A levels and stuff. So it's just, and then just kind of led into this. We realized we're both aiming for elite finance. I wanted to be an accountant, 2-3 years ago. You wanted to, I can't remember what you wanted to do. Get in finance anyhow.
Yeah, I wasn't really pipeline, but then just been speaking ever since year 8. But then I think the real moment, like in regards to this podcast, was like, I think it was January last year, and we just sat around some food, and he just goes, "Let's make a podcast." And
there was a bit more thought went into it than just that. I'm sure everyone.
It's called AlphaPicks.
Yeah.
So I think a little last few bits on this section. Again, we're going to go individual here. So I'm going to start with yourself, Jonathan. So you've got corporate ventures outside of AlphaPicks, and before, as you said, and obviously as a tennis player, you've done a lot. And you could call yourself, you definitely are a serial entrepreneur, I guess you could say. So how do those other ventures and experiences feed into what you do at AlphaPicks?
So we have Kensington Tennis Club. So that's very busy. We have over 10,000 users in Kensington, so it's a lot, across about 7 different venues. We started up Kensington Pickleball Club as well. It's the fastest growing sport in the US. So that's been really, really popular. We've already got we've only been doing it for about a year, the pickleball, but we've already got about 1,000 users on that. And then AlphaPicks, what I sort of add to AlphaPicks, I would say is that, just the type of clients we deal with the tennis, they give us a lot of good pointers. And that's one thing that's really good about having Jesse and Alex, is the pointers we get from, because we spend a lot of time with them, not just, we do a lot of social events with them. Like we've got a really cool event coming up to Roland Garros in Paris, where we're taking a bunch of clients there on a road trip with Mandarin Oriental. And just getting to network with these guys is great. And because Kensington Tennis Club has partnered with AlphaPicks, out of the 10,000 users that come to the tennis, they're also subscribers to AlphaPicks, which is great. And obviously being in Kensington and Chelsea, the type of clientele that we get are obviously heavily based in finance. But a lot of that information from networking is what we can feed to Jesse and Alex. And also Jesse and Alex with AlphaPicks, they come along to us. And then that's how we get that real, well, what's actually happening in the market? Or what are actually people concerned about? A lot of our users, for example, from tennis are under the age of 35 and are in finance already, and they see what's going on in the world, and they have really, they feed that information through to us. And that's one thing that helps us, as it were, to keep our finger on the button with AlphaPicks, because we're writing about what people actually care about, not what the FT's writing about on a Sunday morning with grandpa sat outside a coffee shop. You see what I mean?
Exactly,
it's actually what's happening. And it's a young person's game now. When you look at the CEOs of certain companies, or most companies now, they're much younger.
And just hopping in this, I think a really good point that John helps with, obviously with the tennis, with the pickleball, and with some of his other ventures, is that there's a great expression that a rising tide lifts all boats. And so one of the great things with John is that because he has fingers in lots of pies, is that the cross-pollination between AlphaPicks and other ventures means that they can help grow the business, just as AlphaPicks can in turn help to aid some of the other ventures as well. So when you have that sort of I'm not going to say a portfolio of companies, but when you have different avenues that, okay, AlphaPicks can sponsor a tournament, for example, and then all of a sudden they can reciprocate back and do those things, that sort of collective effort lifts everybody. And I think that's something that's really powerful when you don't just have one entity, but you have multiple ones that are interconnected. You can really help out in all of them. Yeah.
Amazing.
Yeah, I mean, and that word you use, cross-pollination, I don't think there's like a more perfect word to describe the situation, isn't it? Yeah, it does really, really make sense. But then one final question, I think is more directed to the both of you. But so if you weren't in finance, what industry do you think you'd be in?
If I wasn't in finance, well, originally I came from accountancy, same as yourself. Still finance, but a very different area to like market and kind of like journalism. I would probably want to do something creative. I think there is still a creative element to what we do in the markets, expressing your ideas. So I think I also like that, the creative side of what I do now. And if I wasn't in specifically finance, I'd probably do something creative. I'm not sure exactly what. What
you see the memes and stuff he posts. They get a lot of hits. You know what I mean? It's very popular.
Yeah. And for me, it's a good question. I haven't really thought about it too much.
Obviously no need.
Yeah. My honest answer would be whatever would pay the bills is my response. And I think that's also something that speaks in a broader sense to starting up businesses, is that you have to have that humility to you. And I'm not trying to say I'm a humble person, but you have to have that element that you do whatever it takes to get a business off the ground. If it's not glamorous, if it's not cool, if it's not like, something you want to shout about, well, that's fine. But essentially, who's going to pay your rent or mortgage at the end of the day? Who's going to put food on the table?
Who's going to carry the boat?
Who's going to carry the boat?
Who's going to carry the boat?
That's my favourite thing to say.
So it's like, if I wasn't in working in finance or doing anything else, I would happily do whatever it was that ensured that the bills could be paid.
Yeah, that's a very honest answer.
And truth, like a lot of people who are aiming for careers in finance, like they're going with the mindset that, okay, like maybe they say in an interview, or because they're like good at maths, but one main focus, like a lot of me and my friends who are also aiming for finance, they have is like that initial push is like it's a career that pays the bills, isn't it? So 100%. But I think
we're going to move on to the next section now, which is what we've been waiting for, building AlphaPicks, a bit about content strategy and everything in between, as you guys have touched on briefly in the last two sections. So Jesse, again, starting with yourself, as the founder, what was the hardest part about turning AlphaPicks into just a write-in sort of project, into a full-time venture?
The hardest part is building the audience, which when you start out and you're a smaller company, you don't have any followers, whatever, it's hard to know what angle to start in. So that's definitely one of the biggest challenges. I think the way that I've been able to overcome that is being happy to be experimental in what I try. Obviously, social media is a constantly evolving algorithm, isn't it? So one thing works 1 month, it may not work as well the next month or the next year. So yeah, kind of trying to look at other companies that are doing something similar to me and already have the success, see what they're doing. I think it's a good way to kind of shortcut social media strategies. If you look at bigger companies, they've got budgets, they know exactly what's going on. You can take tips from them and learn. And I think just being willing to try new things and see what works.
And the thing is with Jesse as well, is he has a real clear, like when we first spoke about AlphaPicks and Jesse was getting it rolling, is he's got a very clear vision of how he wants AlphaPicks to be. So you know how as something gets more and more successful, you get pitched by everybody all the time. Can you do this? Can you do that? Whereas with Jesse, he's like, he knows exactly where he wants to go with it. And that's, I mean, I'm sure Alex agrees, just quite inspiring for us, because we see, Jesse knows exactly where he wants to take it. And I think that's really helped us to keep the business focus of AlphaPicks.
Yeah, I mean, we've turned down monetary deals just because the companies involved didn't fit with the view or the vision of where we wanted to take it. Which maybe me and John would be more happy to take it.
Of the week, whereas Jesse's like, no way.
But that's important. Again, at the end of the day, you've got to make sure it fits your mission. You know what I mean? Otherwise, people think you're just, as you said, chasing the dollar, not think of the audience first. Being experimental is something we struggle with. If something does well, why divert from it? It's something we need to do a bit more, I think. But it's good to know that it's worked for you guys as well.
But yeah, so now one question for you, Alex. So you kind of alluded to this earlier, but so you did a few years at Citibank, and you said that it was a bit more like, for lack of a better word, micromanaged. So then, how have you like shifted and transitioned into like a startup experience then?
Yeah, no, it's a very good question. I mean, I think for me, to be clear, I love my time at Citi. I love all the guys on Des. It's a real sort of camaraderie, a great environment, and I'm still in touch with everyone there. The thing that you find as you get certainly into the sort of latter stage at the banks is that you might want to put out particular ideas or particular views, but you're slightly constrained because you have a research team or a strategy team that feeds the views to you, and you then implement them to your clients. So I think the transition to startup was in some ways easy when it came to the actual job role, because I had complete remit to generate ideas, generate the thesis behind it, which we can talk about later on, and actually trade that onto our fund and not have any restrictions really. You're accountable to yourself and your P&L, but you didn't have to get sign off for anyone else. So I think that part of transitioning to a startup was what I enjoyed the most. Probably the hardest thing of transitioning to a startup is just the fact that before, I would have Jesse sat here with his monitors, John was 2 down with his monitors. You know what I mean? You could shout to John about what he was thinking, or all that sort of element of being in an office with people, with a time scale of I had to be in the office by X time because otherwise I'd be late. Whereas now you wake up in the morning and you've got to be self-disciplined to get yourself out of bed and get going. And for the most part, we work remotely. So I've mirrored my sort of desk setup in the office at home, which helps me feel a little bit more comfortable. But at the same time, you have to be a lot more self-motivated to do the same job or different jobs. But it's just you, and Jesse's he's a call away, John's a call away, but they're not there with me. So that's probably the hardest part.
I think, what would you say, just off the back of that, for a student, go into a startup from university or go into a big bank and then into a startup?
I mean, I would always say to go into somewhere to get your experience. Yeah. So I'd say, if we're talking finance, a bank or a broker, or for any industry they're looking to go into, going somewhere where you can be taught on the job, I think is invaluable. Because I think for all three of us, we all worked in our respective industries under someone and got taught the role. And so it's only then that you can figure out where inefficiencies are, where things can be done better, where things can be improved, and then you can go off and do that yourself.
So I mean, it's good to be employable, isn't it? You know what I mean? You want to be employable. So if you start off at like a corporation or somewhere that's actually organized, that has a structure, that has like a method or a method statement of how to do things, and then you learn your skill, you see where the gaps are, start building something on the side, and you see where that takes you.
Yeah, and I imagine you all built your own networks in your individual careers before that you've been able to, as you said, use and in this venture, which also helps as well. So, question to all of you now, and probably a hard one to answer. How do you all split responsibilities at AlphaPicks, like between trading, research, content, community, social media work, and everything else in between?
I would say what we're very good at actually is working to each other's strengths. So, for example, John is a real ideas man. Is John the best person at writing commentary? Like, no, and I think he'd acknowledge that. So he comes with the idea.
Doesn't sound like it.
Full stops and commas are the same to me, guys. Capitals wherever you want.
And it's just an example. I mean, I could, give it with myself as well, where I'm good and not good at. But we know as a three where our strengths and weaknesses lie, and we've learned that. And so now when it comes to splitting up roles, I'll say Jesse is the best content writer of all of us. And so, for example, if we need a really good piece put out, it'll be Jesse who will write it. Conversely, if we want an idea or sometimes of how to express a view, we'll probably all come together and put views out there. But by working on our strengths and weaknesses, it's actually, I would say, quite easy to split up day-to-day roles because we all know who's going to be the best at that role. Yeah.
Everyone's got a position on the football pitch.
Yeah.
You just got to respect your position. So that's how you score goals, like Inter Milan yesterday.
Yeah. I'm guessing you're a supporter?
Yeah, I mean, I like, I just like good football.
Yeah, that was a great game. It was a great game. that gives away when we filmed it as well. Cool. Anything to add to that before we move on?
I think Alex makes some good points.
Yeah.
I think also I would add that none of us are so set on like I do this and I don't do that.
Yeah.
Like we're all happy to take it. Like if Alex is busy working on something, I might take over with something, or if I'm busy, Alex would step in. So being willing to adjust through the week and tackle the task the best way possible has helped.
Another question to the three of you then. So what do you think makes AlphaPicks stand out from like the flood of trading content online? Because on YouTube there's so much content online. So what makes you guys stand out?
So I'd say 'cause it's something we've really tried to nail down probably over the past 6 months or maybe slightly less. We try and serve what we call the sophisticated retail. So essentially you have your retail market that, you know, I won't mention other companies' names because we don't want them to sue us. But, you know, they say like, you know, buy Tesla, buy Nvidia, you know, and it's very sort of generic from that point of view. And then you have the institutional and professional side that is very heavy on jargon, can be quite dry. And essentially has that entire segment of research sort of tied in. And what you have in the middle is you have this growing crowd of sophisticated retail that have moved beyond just buying single stock names, but at the same time they aren't astute enough to know all of the inside banking jargon and trading terminologies, and so but they want to know about what's going on. So we try and provide that middle ground whereby we educate retail and to some extent professional players in asset classes they don't fully understand. We provide the education and we provide the commentary on the news with actionable ideas that gives it to them in one spot. And we do that in a way that, yes, retail can understand it and find it educational, but also it's interesting enough. We talk about Jesse's memes, things like that. It's light-hearted, it's interesting, so that the guys who sit on a stir trading desk and read very dry, monotonous research reports all day, they actually want to read our piece. And we've had the feedback that they like it when they read our pieces because it's much more engaging, much more interesting than they can get from the bank. So that's the sort of segment and the USP that we really try to nail down.
Yeah, I would say you've nailed it on the target audience. I would say additionally our approach to how we're writing, like we've mentioned, like the humor in the articles and stuff, is maybe from a slightly more modern way of writing and modern journalism than like a legacy media company. Yeah. So I think that's also kind of a unique point, which there are more and more people kind of adopting that approach, but it's definitely a unique stance than your big corporations that everyone's heard of and has read for a long time.
Yeah, I think a lot of these big corporations, they almost rest on their prestige. They're like, okay, well, our name is known, we can almost put anything out. We don't need the engaging read because people are going to read it anyway. When I read, like every morning, I read the FT, it's very dry. But genuinely, like I read an article and I feel like I've really got to try and squeeze the opinion out of it and the takeaway for me. Whereas when I read AlphaPicks, it genuinely reads like I'm just reading a normal article or like a blog, if you know what I mean. Yeah. It feels very, as you said, easy to read.
Also, just to add, it's something with people that some companies we've spoken with recently, they are slightly limited in putting out direct like opinions. They can write about stories or something like that, but because we're independent writers, it's just us, like we're able to put our own opinions out and ideas, and we don't have to worry about the repercussions.
And I think that's well reflected in the fund. You know, the fund's beating pretty much all the competition at the moment, and that's purely because I think we've got our finger on the button basically, and that's why it's reflected on the fund.
Amazing.
Yeah, and it seems like that sort of niche would just be growing in the coming years. Like the more like younger people like ourselves enter the industry, I think they'll be more inclined to read through your guys' content. But
so last sort of question, again, it's kind of the flip side of the last one. So how do you, putting out content, managing a fund and everything else in between, managing client relationships, how do you maintain credibility and avoid over-promising at times, especially in a space filled with a lot of hype?
That's a good question. I would say probably at this stage we do overwork, I would say, in terms of trying to satisfy everything, just because there are so many opportunities that I think John mentioned it sort of at the outset. We have so many sort of plates spinning. We don't exactly know. Well, we have the vision of where we want to go, but we don't know which particular plate or door will open that will really be the one. And so I think if, as a startup phase, if you can keep your options open as long as possible and as many different fingers in pies as possible, even though it'll be a lot of work to begin with, you will then be able to slowly eliminate different ones that just aren't going to work. And then you'll be left with, in a year's time, 2 years' time, 3 or 4 potential scenarios that are really your lucrative angles to go at. So I think we're still in that phase of trying to keep lots of options open to eventually narrow down in the future.
And then also just not flooding it with information. So, we try to keep to us at 3 or 4 articles basically a week. And by doing that, people know when to expect them. It's regular. It's not like that coffee shop that's 50% of the time closed and 50% of the time open. And just because the coffee's relatively good, they don't suddenly start selling croissants, flapjacks, apples, so we try to keep it simple and try to keep to those 3 articles, and that helps us with the workload where we manage our daily lives, we manage AlphaPicks and also the other businesses.
Cool. So it's a short question to kick off this next section of trading and market philosophy. So how would each of you describe your sort of opinion on markets, your trading style and everything in between in one sentence? We'll start with you, Jonathan.
I describe it as slow and steady.
Love that. Yeah.
Slow and steady.
That's a good one.
It's a good question. I think one word maybe would be adaptable.
Right. Yeah.
I would say, I'd maybe choose adaptable when it comes to market.
I know it's harder because you're last now.
Yeah, it's last. I would say, I would actually say trying to be humble, because with the market, it's similar to being adaptable, but a lot of people can't be successful traders or investors because they hold on to wrong views for too long and they refuse to be humble and accept they're wrong. So I think if you can have a trading style or an investment philosophy where you're happy to cut your losses, essentially being profitable, and we can delve into this, being a profitable trader or investor comes down to risk management. It's not really how much you can win, it's how well you can limit your losses. So I would say the trading style, be humble, cut your losses, and that's the best way to go.
So I'm going to stick with you then, Alex. So with your macro lens, how do you balance short-term noise, as we've seen for the past few months, with more long-term, with your long-term views?
Yeah, it's a very good question. So I think particularly over the past few months, it has been very pronounced in terms of you can have a longer term conviction, but the short term noise can really sort of put you offside in the space of a day or a week, or the other way, an hour, let's say, particularly with some of the recent ones. So certainly in terms of, I'll talk it from sort of a portfolio level, which I think is the easiest way to answer the question. So we will have allocations to themes and sectors that we have long-term convictions on. So for example, it might be energy, just an example, or finance or whatever. So we will have core convictions and allocations to that, potentially through the equity markets or through the debt space. And we will hold those positions. Now, at the same time, particularly over the past month where we've seen extreme sharp moves lower, you have to balance that up with more tactical positioning. So within the fund, for example, you keep some allocation as cash on hand. And so what that allows you to do is take more tactical trades to offset the potential impact to your long-term portfolio. And obviously, usually they're offsetting trades. So if we hold a long position in, let's say, stocks in a particular sector, and let's say they're US listed stocks, then over the past month, we would have had downside trades on the S&P, for example, buying put options or having short views, inverse ETFs, things like that, that essentially not only provide a hedge, but allow you to take a tactical view on the market while still holding your long-term views. And then the idea is that obviously you take off those tactical trades after an hour, a day, a week, and you still have your long-term position that then can do well.
And then to yourself, Jonathan, as we said at the start, cryptocurrency, very, very interesting space for ourselves. I mean, we've got our own head of crypto as well, who's so excited with the whole space, which is amazing as well. So when you were really into it, and 7 years ago, I think it was, so how did you manage the emotion when you were getting involved with these volatile assets?
How do I manage the emotion? I would say, I mean, like they always say, invest money that you're willing to lose.
Yeah, of course. Yeah.
And just keeping a zoomed out approach. So I didn't really do too much like the meme coiny stuff. I just kept it very simple, just to Bitcoin, because it's obviously, you know, the one and only, the chosen child, and Ethereum and Solana. They're the ones that I kept to, and I just think as well, it's very much, it's a young person's game now, you know. So it's like when my wife, when we moved an asset from Mexico to here, we wanted to do the exchange. It takes like 5 days, you know, and then you have all the fees that you have to pay with it. So it doesn't make sense. And then, you know, with Ethereum or with a stable coin, you send it instantly. You got no transaction fees. And it's just the mentality behind it. Like everybody, like the reason why AlphaPicks is doing so well is because it fills a gap. The gap is people aren't interested in reading long, boring jargon information, but people want something quick, easy, and to the point. And the thing is with crypto and with Bitcoin and with stable coins and with Solana, Ethereum, and so forth, it's instant. You know, you don't have to wait. You want your money there and then, and you don't have to go through a bank. And that's really, because it fills a need that there's a gap in the market for, which is why I still believe very heavily in Bitcoin, Solana, and Ethereum, basically.
I still can't believe there's skeptics out there. Noman will not let me get away with this. A year and a half ago, I was a big skeptic. Then I got in, and it's the only thing I've really touched. But for me, it doesn't make sense. Obviously, now we're inside the world, to understand why there's skeptics out there, because there's so many use cases for it. I mean, we literally just filmed an episode with that will be going out soon, with a software developer that's trying to launch the first, trying to launch Bit 10, he's calling it. So we got that. You got the S&P 500, trying to do Bit 10 with top 10 cryptocurrency coins, and he's building that. And the amount of use cases when he was explaining like everything that he's done, that's it, for me, it doesn't make sense how there are skeptics.
I mean, a simple thing is like we're trying to sell a house at the moment. So you have to pay legal fees. You have the mortgage, which is a pain in the neck. You have solicitors. You can't just sell it because you have to have a buyer. Whereas something like Bitcoin, you have it in your pocket. No one can take it away from you. If you suddenly have to move, if someone dies in your family and you've got to send them money, or you've got to uproot because of economic slowdown, or you lose your job, you just have it in your pocket.
Simple as.
So simple.
Yeah, and the use case, I've got a cousin in Norway, and then when we started this venture, it was just like using traditional methods through banks. The fees would just add up and add up and add up, but there was just like using Bitcoin, Bitcoin and Ethereum, this could be done in like seconds. But another question, this is to you, Jesse. Then now you're head of research at AlphaPicks. Now, in such an unpredictable environment, how do you provide advice and like voice an opinion?
I think a lot of it is doing a lot of research and reading, building like a foundation to understand what's going on, using people that I know that know more than me on an industry or a topic. Speaking to these ones definitely helps me see through the noise, how you said earlier. Yeah, that helps me to build ideas. Speaking then with Alex, I'll take his point of view. We'll bounce the idea off each other.
Yeah, perfect. And I think it leads well into a question to all three of you, or to whoever wants to take it. Very simple. Technicals or fundamentals? Where do you each sit on that spectrum?
Yeah, so I think certainly from our position, obviously we sort of fit into macro trading really for ourselves. And so although we're not explicitly traders based on technical remits, it does partly factor into our decision making. I'll give you an example. So in terms of where we stand, we will always take the sort of helicopter view of an idea or of a conviction that we have. So we'll take a particular view, and then we'll go down into firstly the fundamentals in terms of, why do we like this idea? Does it support, what we're seeing in the markets, et cetera, Then from there, we'll then go into, okay, how do we want to express this view? And we'll look at different asset classes. We'll pick an asset class, and then we'll go, which trading instrument is the best way in this asset class? So Is it in the cash markets, the futures, options, whatever. And then once we've boiled it down to all of those points and we have, okay, we like our idea, we've found an opportunity, we've found the market, found the product, then as a last gauge, we'll look at the technicals and we say, okay, well, does this idea, is it supported by the stock being oversold and on the lower Bollinger Band? Or, is the currency trading towards the 200-day moving average? And so as a last factor, if there's something technical that affirms our view, then we'll pull the trigger arguably sooner. If there's some reason on the technicals where it's like, oh, actually that doesn't look quite good, then maybe it won't put us off the trade, but it might cause us just to sit on it for another day or two until we see how price action goes, is the best way to explain it.
And then again, off the back of that, to all three of you guys. So what's a common myth about trading, again, whoever wants to take it, that you think students or young traders often fall for?
I would say there's no get rich quick. If you're sold on the perfect, we spoke about indicators, the perfect indicator or something like that, there's not. You might hit something, get a home run the first time, but you'll strike out plenty of times after that. So it's a slow compounding game, but it's not necessarily a boring one. I would say that's mine.
Yeah, I mean, you have to work hard. You can't. Sometimes when we're young, we try to think, okay, we can do one good trade and it's going to sort us out and try and take a shortcut. There's no real shortcuts to hard work.
Yeah, and I'd say the biggest misconception as well is that you have to be right 100% of the time to be profitable. Whereas in reality, some of the best guys I know, one of the smartest investors I know, a guy called Deepak, even on his ideas, I'd probably say he was right 60% of the time. But if you're right 60% of the time and you have appropriate risk management in place so that when you lose 1 unit of risk, when you win, you make 2 or 3 units of reward, you can afford to be wrong 40% of the time and still be a profitable trader after a year or more. So I think that's the biggest misconception, that these 90% win rates, you don't have to be that perfect in order to be profitable.
I was someone who kind of fell for that because I mean my trading experience is probably nowhere near your guys's, but right at the start of you guys remember a few years ago when there was the whole GameStop thing happened. Then I was like, oh look, I'm the perfect trader because it's just going up and up and up. Oh look how much money I made. And then, a few weeks later, 15-year-old me was just like, okay, this is completely different. This is a different ball game. But last question on this, and kind of linking this to the last question. Now, what's the biggest trading mistake or investment mistake you guys have made? And then, what did it teach you? I
think the biggest mistake or the biggest lesson to learn is the emotional side of trading, which I think you brought out a point earlier about that. Not getting too caught up in the euphoric when you're right, like with GameStop, it was going easy, like everything just went up, and not focusing too much on the fear when things are going down. It's trying to keep a balanced head and really looking at how you're exposed, what the idea is, rather than trading off emotions, which I think for most people is probably a big lesson to learn. I don't think there's many people that start off with a perfect mindset. It's something you have to develop.
Yeah. I think for me it's been thinking as a team. Sometimes you have a bit of complications and you can send that message even as a text, but it's always better to pick up the phone, make a call, talk it through, sit down with the person. And I think also just having, we have a team of very good people around you. So whether that's you found a stock you really want, whether it's a house that you want to buy, whatever it is in life, you need to have good people around you, and you need to talk to them, especially as a young person like your audience is. And everyone who's successful always has a good team of people around them. And when you knock those ideas past others, and then you're humble, like Alex has been drumming on, that's going to help you to avoid. You're still going to make mistakes, but it's going to help you, hit that 60% right instead of 60% wrong.
I'm a big believer in you're only as good as the people you surround yourself with, and I think when we were younger, you have just believed that more people around you is a good thing, right? Even when it's just friends or just going out and stuff. But then when you get older, you realise that the smaller your friend group, the closer you are with them, it's better. Even if you don't talk every day, it's just even outside of finance, it's just as friends or as colleagues, it's just good to have a smaller support system, as you mentioned right at the start of the episode, to rely on and to be able to ask questions.
Doesn't that famous singer say, I'd rather give 15% to my homies than giving it to somebody else? How did that song
That
go?
was Drake, I think. Yeah. I quote from Buffett. He quotes from Drake. I mean, you can see how the diversity on the team. Yeah. I mean, I'd probably say it's just reiterating that the biggest mistakes I've made are the ones I've learned from in terms of being humble and risk management. Yeah, because I think a lot of it with trading is that you have to learn the lessons yourself, really, in order to really. And I think it's the same in life in general. Is that, you know, someone can tell you, don't touch the kettle because it's hot, but until you've touched the kettle and it burns you, then you are really aware that it's like, that is hot. So, you know, when I talk about risk management being humble, it's only because I've made mistakes in the past where I have held losing trades and lost on them and had consequences. So I think those mistakes you make are the ones you learn from. And so I'd say risk management and humility stem from mistakes in the past. Yeah.
So we're sticking to trading philosophies, market philosophy a little bit, but now current market outlook, which I think our viewers and listeners will really appreciate as well from experienced guys like yourself. So to everyone, what themes or trends are you all watching closely, and is AlphaPicks watching closely in 2025 and beyond?
Yeah, so I mean, it's a very broad question. I think I'll try and, I mean, just probably take it from a macro perspective. I'll try and take it from our sort of portfolio level in terms of sort of how we're positioned there based on our views. And the sort of the tactical, the long term for, let's say, 12 months out beyond, is still that we do have conviction in US equities, for sure. You know, it's never been a good time to bet against America, and we don't think that this is the start of anything here. And so from that position, there are sectors which we can delve into more if we want, but essentially long US equities, we still find attractive valuations there. We do also like to lean into crypto a little bit from that side, because we have an agreement that is the future in whatever respect. But obviously the inherent volatility in Bitcoin and some of those other coins means that if you want to hold them with that outlook, you do need to have a small allocation to them from that angle. And then in terms of looking elsewhere, certainly in the commodity space, you know, there's likely going to be continued demand for precious metals. We think of gold, we think of silver, because when you look at the uncertain environment we have, you know, those are natural plays that we don't see sort of changing anytime soon. Maybe you could argue the gold-silver ratio is a little bit overdone, so favoring maybe spread trades there, but, you know, conviction on precious metals. And then looking to FX, again, you know, we wrote actually a really interesting piece a couple of weeks ago on the Swiss franc, which has appreciated significantly. And that element of the Swiss National Bank not being happy with the appreciation, but arguably being unable to stop it. So we do still feel that something like the Swissy has legs to gain against a continued uncertain macro backdrop. In terms of the US dollar, which everyone's wanting to talk about, I'd say we're fairly neutral on it as we stand. We did call sort of at the beginning of February that we thought it had peaked for the year, which was probably the best call we've had this year, I'd say. And we rode that down nicely. We think sort of around the dollar index at 100 is sort of where we're comfortable with it at the moment. But certainly we'd say neutral on that point. And then the last one, certainly at portfolio level, is that our conviction, certainly through the end of the year, is that heightened volatility is here to stay. Be that from Trump and the president with his trading situation, or from other geopolitical factors. We've seen India, Pakistan obviously kicking off overnight. You know, obviously the situation with Russia, Ukraine still going on. You know, in Europe, you know, the historic fact that Chancellor didn't get his vote through the first time since World War II has never happened. So, you know, there's a lot of uncertainty and drama that has the potential to flare up. And so certainly at a portfolio level, again, we talk about leaving some funds in cash that allow us to be tactical, both short and long the market, which I think is important because this year, you know, we've seen a lot happen in April already, but there's still a lot more that's going to be coming this year. So I think it's definitely a market to keep your long-term convictions, but really have hedges and tactical positions that can allow you to generate alpha along the way.
I would say on the linking to the tactical and also just the broader like macro landscape, there's obviously a lot of developments that we've had and then things that have been walked back. So you're seeing a lot of movement in the market, which can be quite a bit of noise to look through and try to figure out what's happening. But I think for the rest of this year, we're unlikely to see a change. So the biggest thing for myself is trying to figure out what the like second order effects are, maybe what the knock-on effects will be that the markets aren't quite looking at. So one example recently was LNG. We did some research and wrote an article on that and looking at how that might be involved in the trade deals, which it seems to be the route that Trump's now going, sort of these trade deals rather than strong tariffs. But we might see that dynamic change and then the tariffs come back and then it's looking at who are the winners and losers of that situation. Yeah. So yeah, trying to keep your finger on the pulse and have a mind of like what could happen that isn't really being looked at right now.
Yeah, I mean, I just think things have changed a lot. I think it's a bit like watching a movie. When you sit back and you decide what movie you want to watch. Well, in the past, it's been sort of a bit more like a steady love story. Yeah. Whereas now, it's like a drama. Now it's like a drama. Like it's an intense drama and a lot of plot twists. A lot of plot twists. So I think for the whole time, you're going to see Trump. You're going to see a lot more volatility. Yeah. So I think it's important to always, we're trying to keep a bit of cash always on the side to invest, especially when it drops. And also, I think at the end of the day, long term, we are quite strong on America basically, and we can see, Trump's surrounded by businessmen, and businessmen want to fill their pockets. So they want a strong economy, they want a strong stock market. So long term, for the next 3 years, we think, you're going to see a lot of drops, but we think it's going to be very strong.
So, Jonathan, this is a question directly to you. So, is crypto still like a compelling space, or what's your opinions on it right now with the recent volatility then?
I mean, what I think is very interesting is, was it FCA just announced last week about now banks in America can custodian Bitcoin or crypto. So you've got to think in the past how much it's exploded when everyone was offshore and hiding from America and hiding from the SEC, whereas now they're all being invited in, and all Trump's advisors are all heavy on Bitcoin. His family are heavy on it. So I think for example, right now for us, we go on our app HSBC, we go on Lloyd's, we go on Barclays. What can you do? You can send money and it arrives whenever it arrives, if you can get past all the checks. Whereas imagine a time which is coming soon, because it's going to happen very soon in America, where you can custodian Bitcoin. So if that's again on everyone's phone, and the government are pushing it, then it's that space is only going to explode. And then the people who are interested in that market at the moment are the young guys. What are the young guys going to be doing in 10, 15 years? They're going to be even more heavily in that space. So that's why, as a fund, we still focus on the traditional stuff. But it's good to have, same as BlackRock. What do they say, 2% or 5% allocation to Bitcoin?
Well, Larry Fink's a visionary in this space. He's so open to it.
But he's changed a lot. He was completely against it. He's done a U-turn. Exactly.
Do you remember that?
Yeah. It was at Davos a few years ago, wasn't it? Yeah.
I remember that vividly. It's not supposed to be about me, but I was at I wanted a degree apprenticeship instead of university back in the day, and I went to a JP Morgan. Part of the assessment was a networking evening where you had a QR code around your neck, and you had to have conversations, and they'd scan your QR code and rate the conversation in front of your face. And it was the day after that interview, and I remember I was speaking about crypto, but just as a buzzword, and one of them asked me, "Oh, did you see his interview?" And then I pretended like I did, and I literally said that, "Oh yeah, it's great to see that he's so bullish about the space and everything." It was a nightmare. I mean, so somehow I got through to the final stage, but I didn't get the offer. But that interview always, I remember, and then obviously he's flipped now because again, as you said, the whole space has changed, and as you said, I'm yet to read that paper the FCA has given out, but it's good for the space at the end of the day.
Good for the space. I mean, we did. I think we might have mentioned in the past, but we did a survey on our on who we write to, basically, about what they were most interested in, And we thought it was going to be a little bit more on the crypto side, but I think it was it 10% of people liked articles on that? Less than 10%. So it's still a market which is growing.
Yes.
But our focus is still obviously the equities. But it is definitely a segment that we want exposure to.
So again, it was a very good answer to the start of the section, but it was very broad. But what does market sentiment feel like to you guys right now? Optimistic, cautious, or confused?
I'd definitely say confused. Yeah. I mean, I think at a very general level, if you want to take it more specific, you look at like the S&P, for example, and I always remember an old friend, trader on desk, Ian, he would also always do, or more so on currencies, is that if sterling dollar was at 125, he'd be like, what comes next, 120 or 130? And that really allows you that view of like, okay, well, yeah, where do I actually think we go from here? And with the S&P, where it was sort of 5,600 circa, you say, okay, 400 up, down. Do I see S&P back at 6,000 or back at 5,200 next? And I think, and there were some interesting polls that we did and a few other friends on X recently, and it was very mixed results in terms of what they were saying, which I think highlights the confusion in the market, because you have that flip side of, this, some may say a bear market rally we've had over the past sort of 8 to 10 trading days could continue and push us to 6,000, sure. But at the same time, if it is a bear market rally and you start to see this move being faded, then a move back to 5,200 is really not out of the question. So I think the view on the market right now is definite confusion. And I think you can see that pronounced when you think of, higher, lower in the next month. And it's a very split, and even on this table, probably have split views of if it's 6,000 or 5,200.
Yeah, I would say confusion is a good word to describe what the sentiment probably is among quite a few people. I also feel like, although the market's up 10, 12% from the lows, people are still very bearish, and it almost feels like the pain trade is to continue higher because everyone's still in a bit of disbelief that everything will be fine or we won't hit a recession or in the US. So I think, the current, like the last week or so, it feels like the pain trade is move higher, but everyone's still very bearish and kind of in not believing the move.
So you're on the last section of the episode. It's gone so quick. But Jonathan, I'm going to pose you a question. So for students trying to break into this industry, what advice could you give them?
What advice would I give them? I would say, a bit like Alex has said, working hard. Being willing to do, because when you leave university or you're looking at leaving university, you need a job, so to be humble enough to take whatever comes your way, but start off in a corporation, sort of like what Alex did, learn the trade first, and then last, I think, just always have a side hustle, because you never know, if you work for a big bank, you never know what the CEO is getting up to. You never know if he's bankrupt. You never know if he's paying his bills. You never know if he's got to sell the building and move to Monaco. You never know. So always have a side hustle. Always have something that you're doing on the side. Could be something unrelated to what you're doing. Have a few business cards. Have a website set up, and keep doing your 9-to-5 job, whatever you get, and try to feed that other business, whether it's finance or whatever it is, because you can only really rely on yourself. You can't really rely on the company unless it's yours. Yeah.
And of course, you didn't have a traditional finance path, as we've covered. And for a lot of students, they're scared of, if I don't get into finance out of university, I'll never get into it. So how can you reassure them they can still break in, as you have?
How can I reassure them to still break in? I think that's one reason why the AlphaPicks articles are so good, because you could be in the industry or not in the industry. And what the articles that we write allow you to be is to keep your finger on the pulse. Without needing to know the jargon. And just by doing that, you never know what opportunities are going to come your way. If you like flowers and you start doing that as a job and you open a flower corner shop and hopefully it goes well and you make money from it, what are you going to need to do with the money? Well, you're going to need to learn how to invest the money. And then you're going to need a fund, or you're going to need to just figure out how to invest that money wisely. And that's where you end up getting into finance, because if you're good at what you do, you end up having to do something with the money, which means you need exposure to finance, which means you end up getting into finance because that's what your skill has taken you to. Does that make sense?
Yeah. I would add on to what Johnny said about starting a side hustle almost. With the internet age that we live in now, there's so many possibilities of ways to start something, whether you start it under your name, you can start something anonymously, do it on the side. There's so many different avenues that I think it's worth exploring, and there's probably not much to lose. You could waste that time doing less valuable things. So I think it's worth just investing some time and just seeing what you can find out there that could pay off.
Yeah. And the thing I would say is try and go from sort of macro to micro on the sector. And what I mean by that is because you get but you get some guys doing the A-levels or even at uni, and they want to be an investment banker. And they think that all JP Morgan does is investment banking. And the reality is that investment banking is a division within a major bank. Aside from the investment banking division, you have the corporate banking division, you have global markets, you have private banking, you have wealth management. And so you have, across the large tier one banks, probably 8 or 9 different divisions, of which investment banking is one of them. Yeah. And so really try and delve deeper into, when you say you want to go into banking, what do you actually mean? Do you mean you want to be back office process doing like compliance for global markets? Do you mean you want to be middle office doing like trade settlements for the private bank? Do you want to be front office in the commercial division, as a relationship manager for Apple and Amazon, that type of thing? So there are so many different roles within banking that really you need to understand what division, front, back, middle, back office, and where you want to sit. Because if you just say you want to go into banking, you go to an open day and you say you want to be, if someone showed up to me and said, I just want to come into banking, I'd be like, this guy doesn't know what he's talking about. So, you really need to know ahead of assessment days, interviews, what division you're going to.
So one question I'd really like to ask, and Alex, we've asked this to you before at the event where we met you, but we'll ask it again. So what books, podcasts, resources, and most importantly, films would you recommend to aspiring professionals within this industry?
I'll kick us off with the book. And the book I would most say to read is When Genius Failed, which is a great example in the 1990s of a company called Long-Term Capital Management, a fund that essentially thought they'd hit on the golden goose and was very profitable trading a particular type of strategy. And I won't ruin the book, but obviously something happens that causes problems. And the reason why it's a really good book is that it doesn't try and seek to over-glamorize trading. It's obviously 100% factual, and it provides a really good insight into some of the mechanics of trading and some of the plumbing in the big banks, which if anyone is wanting to go more specifically into sort of global markets and sales and trading, gives a really good insight into finance. So that would be one book I'd recommend.
I'll go a different angle with books because that's a very good market one. I'll go one that I've read recently, which is a good one that I've been thinking about. It's a book called Range, and it's speaking about the benefit of having breadth of experience rather than just depth, because the world is becoming so over-specialized. Yes. And how having a breadth across lots of different areas actually, they've found, has helped people problem solve, because they approach things from different angles. I think linking that to ourselves, it's a bit like me and Alex have maybe come from a more traditional finance background, but John's come in with a different perspective, and it works that when we're working together, John's thinking from a different angle to us. So you have that lateral thinking, which I think could be very good for problem solving in the world. So linking to the what Alex was saying about like the investment banks, not being too specialized and being willing to gather experience through different areas of finance, I think can help you in the long run.
And then in terms of channels that I listen to, there's a channel by Anthony Pompliano, I think that's how you say his name. He's like an American business guy. He used to work on Wall Street, and he just gives a real good macro view of what's going on, especially in the US. And yeah, I find his podcast and what he does really, really insightful, both on the Bitcoin side and on the global side, basically.
So again, I'm a massive movie geek, and I think you can learn a lot about a person about their favorite films, even if it's non-finance related. So favorite films and ones that really shaped the outlook on life. We'll go start.
Out of the big three movies which everyone speaks about, Margin Call, The Big Short, and Wall Street, the Gordon Gekko one. I think Margin Call is the best one in my opinion, because like you brought out earlier with When Genius Fails, it doesn't glamorize Wall Street how some other movies do. So out of the three, my favorite is Margin Call, and a very good depiction of what happened in '08 with I think it's trying to depict Goldman, I think, without saying that. So I thought, for me, that's my favorite movie.
I think, you know, when he obviously Jeremy Irons plays so well in that movie, when they first walk into that big board meeting, I think that for me equally put terror into me, like walking into a meeting like that, but also excitement, like he actually let obviously one of the juniors actually come up and speak, and he knew exactly what was going on in that meeting. For those who haven't seen it, I urge you to watch it, but he knew what was actually going wrong, but he just wanted them to explain it. I think that for me was like really instilled in me that it can go wrong very, very quickly, especially with such a stalwart like Goldman's. But who wants to go next?
For movies, I'm serious Rush Hour 2. Otherwise, I start work at 6:30 and I finish at 10. So I haven't really got any time.
I'd say similar to John. I don't watch many films these days, but certainly to take a slightly different, slightly financial view on this. There's a great film called A Beautiful Mind with Russell Crowe, early 2000s film, and it's kind of semi-finance, more sort of maths, economics related, and more about being misunderstood in your line of work until, you know, and going against the grain. And I think that's a great film for that. And another one similar off the bat is Good Will Hunting. You know, I think again that the life lessons that you can learn from watching that film, not just in terms of finance, but just in life, I think are great, timeless. Yeah.
I agree. And mine is always, I'll come to you, Noman, but mine's always been Glengarry Glen Ross. For me, because I really want to go into like sales. It's been like a dream of mine for a long time. So, and just kind of the way the whole film is set out. I mean, my dad showed me that God knows how long ago, but I always really liked that film, even though it is fiction. But obviously, it's got Pacino, Kevin Spacey, Alec Baldwin, the legends of the game. What's yours?
Mine's The Pursuit of Happiness. I mean,
good one. Yeah. I mean, that's the real grind.
Nothing much needs to be said on that one, but yeah, just how it depicts, and it's based on a real story, so it's just an amazing film. But I guess we're on to our last two questions of the episode, and these are questions that we asked to all of our guests. Now, to the three of you, looking back on your continuing journey, what are you the most proud of?
I think for me is taking a risk to set something up for myself rather than staying in probably a more comfortable, easier corporate lane.
Yes.
I think that's what I'm most proud of.
I think I'm most proud of just being able to keep a routine. You know, it's really hard. I was saying to Alex the other day on the treadmill, it's really hard to be physically fit, to run a business, to be a good husband, to look after a family, to have good friends, to have time to relax, to have enough sleep, to eat properly, to exercise. And I think just being able to keep a balance between all of those, no matter what life throws at you, because when you're young, you're at university, you're probably not sleeping enough. You know, if you don't sleep enough, then you don't eat the right food. If you don't eat the right food, you don't make wise decisions. You don't make wise decisions, you don't get the right job. You know, so it's just doing the simple things well, and that's what you'll be successful, whatever you do. At least you'll think clearly.
Yeah, I'd say, I think for me, I'm proud of the good guys can win. Because I think certainly a lot of people coming out of university, or the perception is that you have to be ruthless, you have to be, you know, tread on everyone to get where you want to be, all this type of thing. And in reality, I like that you're sitting in front of three people that are good guys, but you can still do well in business, in your industry, again, family, friends, whatever. You don't have to be unpleasant and ruthless in order to get where you want to be in life. Like, if anything, being a good person, again, we've spoken about qualities, humility, trust, that type of thing, actually takes you a long way.
Yeah, because I think the thing is as well is that we get to spend a lot of time, especially with the Kensington Tennis Club and the pickleball, with a lot of very wealthy, you know, very much at the top of the tree of what they do. And a lot of people think, like Alex said, you have to be this certain way, you have to be rude, you have to be cold, you have to stab people in the back to get to where you want to be. It's not true. You know, those guys are in the middle and they stay in the middle.
Because sometimes when I'm sure you can echo, we do get told it's a rat race sometimes, and it's good to know that it's not. And being good guys, I mean, not all finance professionals can sit on a bench with two 19-year-olds in a tennis court and break down their career for almost 90 minutes now. So we really do appreciate that. And genuinely, we've spoken to professionals or tried to get them on and say, oh, I just realised you're student-led, we won't get you on. And we think that's where the real value is, which is why this episode has been so good. I hope everyone else agrees. But last two questions, it's bittersweet because it's the end of the episode. But briefly, if you could give your younger self, as I said at the top, you can choose the age you want, but one piece of advice, what would it be, if anything?
It was an analogy that was given to me recently. I don't know where it came from, but I think it's a very good principle in life. It was a pottery class that over the summer break, they were given, or two groups were given two different tasks by their tutor. One was to do something every day, like make a vase every day, no matter what the quality was, but do it every day, make as many as you can. The other group was given the task to just create one vase over the summer and make it perfect. By the end of the summer, the group that made them every day, no matter like how perfect it was, came out with a better product than the people that put all their time into one. So being willing that if you're trying something new, just start and do it a lot, and you'll work out how to do it well, and you'll figure out how to get over the hurdles in life. That's what I would say, my advice.
Consistency is peaks and troughs. It's not linear. Those graphs you always see. But yeah, that's really, I would love that. I'm going to steal that one, I think.
I would say to my 18-year-old self is that everything turns out okay in the end. And if things aren't okay, then it's not the end. Because I think a lot of times when we grow up, especially when we're young, we have very short-term vision. And if something's not right, we feel that it is the end of the world. And actually being able to think about it, and actually something John said to me actually a long time ago, that if you're worrying about something or something's not going right, think about, is this a problem you'll still be concerned about in a year's time or 5 years time? And if the problem isn't something that will be a problem in 5 years time, it shouldn't be a problem today. And so really trying to look past that short-term vision and know that in the long term, everything all works out okay.
What's the biggest takeaway you want our viewers and our audience to take from your stories?
I would say that certainly from looking at the three of us here and the different backgrounds that we have, is really that anyone from anywhere can do anything they want to do. And that, we're sat in this beautiful Garden Square in Kensington, right? It's a long way from Lincoln, where I was born and raised. It's a long way from sleepy old Dorset, where John was born and raised. And really, it doesn't matter what it is in life. If you have a desire and you're happy to work hard and all the qualities you've spoken about before, that anyone listening here, if you have a dream, if you have a passion, don't let anyone tell you that you can't. Again, pursuit of happiness, right? Yes. Don't let anyone tell you can't do something. Not even Will Smith. So yeah, that's what I would say.
I think on that, having a dream, I think be willing to think outside the box with how you approach something. You don't always have to follow the way that everyone before you's done it.
Yeah, I mean, guys, we've spoken for over 90 minutes. It's been an amazing episode. I've learnt so much.
Yeah.
Lamar's learnt so much, I'm guessing. I mean, and so that's why we know our viewers and listeners will as well.
Yeah, and just the sheer fact that we're like, this is a podcast out here, 3 professionals, 2 students on a tennis court. It just hasn't been done before, and hopefully that uniqueness can add a lot to our views.
Yeah. And hopefully this inspires some as well, which I'm sure it will. But for our viewers and listeners, if you are watching us on YouTube and you love that episode as much as we did, but for some reason you still haven't subscribed, hopefully our 10th episode has made you subscribe. So please be sure to do so. And if you're listening to us on an audio platform, be sure to follow us on there as well. You can rate the episode, you can leave a like, leave a comment. Let us know if there's someone we should be talking to that we haven't spoken to yet, or a topic we should talk about that we haven't spoken about on the podcast yet. And of course, our social media platforms are in the bios of all of our platforms. You can go to some of the events that we speak at. You can sometimes we put out hiring posts as well. We're always hiring interns, adding to our team of 20 plus students just to help people break into finance and learn along the way. And of course, all of the links to AlphaPicks' stuff will be in the description below. So be sure to check that out. But yeah, thanks to everyone involved. Of course, I have to say that to the behind the scenes team. Thanks to Liam, president of the LLBF Investment Society, for getting us involved with these guys. Of course, thanks to you guys for getting us on the tennis court, for helping us out. Thanks to Riyad Ansar, the behind the scenes team. Riyad, the CEO of Young Asians in Finance, Ansar, one of our content creation interns, and of course, thanks to Tom as well from AlphaPicks for helping us out. But 10 episodes in, here's to 100. Thanks again to everyone who is watching. We'll see you next week for yet another episode of the Smart Money Show. Take care and stay tuned.